Hello everyone, welcome to the market opening bell on Thursday, September 25th, your 10-minute guide to the stock market. Affected by the overnight decline in US stocks, Hong Kong stocks opened lower on Wednesday but rebounded, fueled by the artificial intelligence frenzy. The Hang Seng Index, after dipping 85 points at the open, reversed course and climbed as much as 403 points to a high of 26,562, closing the day up 359 points or 1.4% at 26,518. The Hang Seng China Enterprises Index gained 152 points or 1.6%, ending at 9,442, while the Hang Seng Tech Index rose 156 points or 2.5% to 6,323. The total market turnover reached 288.7 billion Hong Kong dollars. Southbound funds net purchased $13.705 billion worth of Hong Kong stocks, with notable net buys including Alibaba at $5.339 billion, Tencent at $2.651 billion, Shandong High Speed Holdings at $880 million, SMIC at $687 million, Hua Hong Semiconductor at $205 million, and Innovent Biologics at $130 million, while net sales included ZTE at $353 million and Xiaomi at $315 million. Statistics show Southbound funds have net bought Alibaba for 24 consecutive days, totaling $64.753 billion, and SMIC for 4 consecutive days, totaling $1.6015 billion. In the Asia market, the three major indexes rose collectively, with the Shenzhen Component Index and Chinex Index hitting new yearly highs. The Shanghai Composite Index increased 0.8% to 3,853 points. The Shenzhen Component Index gained 1.8%. The Chinex Index rose 2.3%, and the Star 50 Index surged 3.5%. The total market turnover was 2.35 trillion yuan, down 171.3 billion yuan from the previous trading day, with over 4,400 stocks advancing. The renminbi central parity rate against the US dollar was lowered by 20 points to 7.1077. On the news front, the Ministry of Industry and Information Technology, along with other departments, issued the work plan for stable growth of the building materials industry 2025 to 2026, emphasizing strict regulation of cement and flat glass production capacity. The plan prohibits new cement clinker and flat glass capacity, requiring new or renovated projects to formulate capacity replacement plans, with cement companies needing to align actual capacity with registered capacity by the end of 2025. This news did not stimulate related sector stock prices. In the Hong Kong stock market, Alibaba surged nearly 9.2% to $174, hitting a new high since August 2021. The 2025 Cloud Habitat Conference, held from Tuesday to Friday in Hangzhou, featured Alibaba Group CEO Eddie Wu sharing insights on AI development, stating that achieving artificial general intelligence (AGI) is a certainty, but only the starting point, with the ultimate goal being super artificial intelligence (ASI) that can self-iterate and surpass human capabilities. Alibaba Cloud will pursue two core strategies. Its Tongyi Qianwen model will remain open source, aiming to become the Android of the AI era, and it will build the next generation computer with a super AI cloud to provide intelligent computing power globally. Alibaba is advancing a 3.8 trillion yuan AI infrastructure plan and expects to increase investment to prepare for the ASI era. At the conference, Alibaba launched its largest and most powerful AI model to date, Qwen 3 Max, and announced a partnership with Nvidia in physical AI to promote embodied intelligence applications. Alibaba Cloud's AI platform PAI will integrate Nvidia's physical AI software stack, combining Alibaba Cloud's big data AI platform, capabilities to provide enterprises with full chain services, including data pre-processing, simulation data generation, model training and evaluation, robotic reinforcement learning, and simulation testing, shortening development cycles for applications like embodied intelligence and assisted driving. Alibaba Cloud also announced a new global infrastructure expansion plan, establishing cloud computing regions in Brazil, France, and the Netherlands for the first time, and expanding data centers in Mexico, Japan, South Korea, Malaysia, and Dubai to better serve global customers' growing AI and cloud computing demands. Alibaba's subsidiary, AMAP, announced on Tuesday that it would waive the annual platform fee for all catering merchants nationwide for 1 year, leading to a 631% surge in new catering merchants joining AMAP on September 23rd alone, setting a historical peak. Kuaishou closed at $76.85, up nearly 4% following the upgrade of its Keling AI-based model with the launch of the Keling 2.5 Turbo model for video generation, showing significant improvements in text response, dynamic effects, style consistency, and aesthetic effects, outperforming models like VO3 Fast, C-Dance 1.0, and C-Dance 1.0 Mini in professional evaluations. On the earnings front, Nine Dragons Paper reported full-year results for the year ending June, with revenue of 63.241 billion yuan, up 6.3% year-on-year, and net profit rising 135.4% to 1.767 billion yuan, with earnings per share at 0.38 yuan, though no dividend was declared. Gross profit increased 26.9% to 7.245 billion yuan, with the gross margin rising from 9.6% in financial year 2024 to 11.5% in financial year 2025, mainly due to raw material costs falling more significantly than product selling prices. CTF Chow Tai Fook Services reported full-year results for the year ending June, with revenue of 24.285 billion yuan, down 8.1% year-on-year, and net profit up 3.7% to 2.162 billion yuan, with earnings per share at 0.54 yuan. A final dividend of 0.35 yuan was declared, unchanged from the previous year, with a proposed bonus share issuance on a 1-for-10 basis. Operating profit attributable to the group rose 7% to 4.4662 billion Hong Kong dollars, driven by a 29% increase in financial services operating profit to 1.2421 billion dollars, though partially offset by underperformance in the duty-free business within the facilities management segment, despite its sale in December 2024, slower than expected traffic recovery on certain road projects, and a decline in average rental rates for mainland logistics properties, reflecting slow economic recovery. Chery Automobile, which will be listed today, closed at $33.68 in the grey market, trading on Phillip Mart, up 9.5% or $2.93 from its IPO price, yielding a paper profit of $293 per 100-share lot, excluding fees. US stocks rose initially but later retreated, declining on the second day. Market skepticism emerged regarding recent investment plans by tech companies, with concerns about mutual investments potentially triggering antitrust investigations and doubts about the sustainability of the AI investment boom. The S&P 500 fell 0.3%, closing at 6,637 points. The Nasdaq also dropped 0.3%, closing at 22,497 points. The Dow Jones fell 171 points or 0.4%, closing at 46,121 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, rose 237 points or 2.8%, closing at 8,629 points. Alibaba's US ADR stock price surged 8.2%. Nvidia continued its Tuesday decline, falling an additional 0.8%. Oracle also fell for two consecutive days, down 1.7%. Reports indicate Oracle is seeking to raise $15 billion through a corporate bond issuance to boost investment in cloud infrastructure. News that Apple might invest in Intel drove Intel stock up 8% at one point, closing 6.4% higher. Apple stock, however, fell 0.8%. On the economic data front, U.S. new single-family home sales in August rose 20.5% month-over-month, reaching a seasonally adjusted annualized rate of 800,000 units, the highest since January 2022 and surpassing market expectations of 650,000 units, driven by significant price cuts from developers to boost sales. July's data was revised to 664,000 units. U.S. building permits in August fell 2.3% with a seasonally adjusted annualized rate of 1.33 million units, revised up from a preliminary estimate of 1.312 million units, but still the lowest since May 2020. Our stock pick today is China Ruyi, stock code 136. China Ruyi's operations span gaming, content production, and streaming media. In the first half of this year, the company achieved robust growth across its core segments, with synergistic operations enhancing monetization efficiency. This drove a 20% year-on-year increase in total operating revenue to 2.206 billion yuan, with net profit reaching 1.228 billion yuan, reversing a net loss of 123 million yuan from the same period last year. Adjusted net profit was 1.303 billion yuan, up 140%. The group's core gaming brand, Jingxiu, generated 1.21 billion yuan in revenue in the first half of 2025, a 40% increase. The group remains focused on high-quality game development and operations, with classic titles providing stable revenue and newly launched products quickly capturing market share through differentiated positioning. In content production, the group ranks among industry leaders in both the number of films produced and distributed and their box office performance. For instance, the war-themed film Nanjing Photo Studio topped the 2025 summer box office. In streaming, the group's online long video platform, Pumpkin Films, is one of China's largest agency and distribution platforms, consistently introducing high-quality films and top-tier new dramas, contributing significant revenue and profit. Leveraging its strong IP acquisition and operation capabilities, the group continues to expand its category boundaries, building a multi-track product matrix. It has also proactively invested in high-growth derivative markets like trendy toys and collectible figures, such as its strategic investment in 52 Toys to co-create competitive blockbuster derivatives, diversifying revenue streams and injecting new momentum into performance growth. Suggested buy price 3 Hong Kong dollars, target price $3.3, stop loss $2.85. I do not hold the aforementioned stock.